Let's talk about something that's not the most exciting part of corporate gifting, but it is an important one: taxes. A lot of businesses love giving thoughtful client or employee gifts, but they're often surprised when they learn that the tax rules don't always work the way they expect. Quick note before we get into it: I'm not a tax advisor and this isn't tax advice. For specific questions, always check with your accountant or tax professional. But I do want to give you a simple overview so you can make smarter gifting decisions. Here's the big thing most people should know. For business gifts to clients, the IRS generally allows a deduction of up to $25 per recipient per year. And the key word there is deduction. That does not mean you can't only spend $25. You can spend more than that if it makes sense for your business. It just means that in most cases, only the first $25 per recipient per year is deductible as a business gift. So if you send a client a $100 holiday gift, you can absolutely do that. You just typically can't deduct the full $100 as a gift expense. Also, that limit is per recipient, not per gift. So if you send multiple gifts to the same client throughout the year, they generally still count toward the same annual limit. And if you're gifting a couple who both qualify as clients, they may be treated as one recipient unless there's a separate business relationship with each person. Now, not every gift is treated the same way. Some items fall under different tax rules altogether. For example, branded promotional products, meals, certain awards, or marketing-related gifts may be categorized differently than a standard client gift. That's why it's always worth looking at the purpose of the gift, not just the item itself. Employee gifting works a little differently too. One of the biggest things to know is that cash and gift cards are always taxable to the employees. So if you can give an employee a gift card, it usually has to be treated like income. Non-cash gifts can be different. Small occasional gifts may qualify as de minimis, which basically means they're low enough in value and given infrequent enough that they aren't taxable. For example, a company branded mug, a box of chocolates, or a small holiday gift basket may fall into that category. But something more valuable like expensive headphones or a high-end tech gift may need to be reported as taxable income unless it qualifies under a specific award or program. And speaking of awards, there are some special rules for employee achievement awards. If a gift is part of a formal recognition program, such as years of service or a meaningful employee achievement, it may receive more favorable tax treatment. The details matter here, so this is another area where it's smart to get a professional guidance. Also, some industries have stricter rules around gifting in general. If you're in finance, healthcare, government, or education, there may be internal policies or compliance rules that affect what you can give and how much is acceptable. So before sending larger gifts, it's always a good idea to check the policies that apply to your industry or to the recipient's organization. The bottom line is this: corporate gifting can be a powerful way to build relationships, recognize employees, and strengthen your brand. You just want to do it thoughtfully and with the tax side in mind. If you have other questions about how to approach gifting in a way that feels meaningful and compliant, reach out to our gifting experts here at Shadow Breeze. We're always happy to help.